Hi everyone, welcome to BRICS Briefs, your weekly dose of all things BRICS, served up by me, Clive. Each week we're diving into the hearts of the BRICS nations, bringing you fresh news, insights and happenings that are shaping our world. In this week's episode, Rhod Mackenzie from SCOBRICSINSIGHT.com is still with us, and he is going to help us understand the subject of physical gold as it relates to BRICS. Welcome Rod, thanks for coming back.
Well, good to be here, Clive, and let's hope we give a good show and some interesting information to the people.
Oh yes, I think you will, because we had a good response in the last video, and I enjoyed it too. It was nice not to talk to myself, get talk to you, an expert. So that's nice. Thanks. Let's bring up. We're going to start with a bit of Twitter. All right, sorry, but it's how it goes sometimes. Here we go. All right. So yeah, there was a post on Twitter by Dan Popescu. I assume that's how we say his name. Reading Major BRICS Trio, Russia, India, China, official gold reserves. So it's a graph showing from 1940 to 2024 official gold reserves of those countries. I think that's the aggregate. But it's a lot. It's definitely gone up. A lot. And it's continued to go up. Looks like it's a very steep rise from 2007 approximately onwards. So that's interesting. I mean, we're talking about gold, we're talking about BRICS, right? So there's he posted another one here. Gold as a percentage of global financial assets, 1960 to 2023. So see there, in 1960, 5% of global financial assets, and then we're at 0.63% in 2023. So that's interesting.
Yeah, I mean, that's very interesting because that was about the time when the dollar dominance really started to happen in international trade. So obviously gold stopped being the British stopped the gold standard long before that. The US did, and in the 60s was when the US decided that they wanted to use the power of the US dollar, and that worked pretty well. I mean, because it was up until in 71 back to buy gold. When that came off with Nixon, and the US stopped offering a fixed price for the dollar to gold, that was the start of the serious depreciation of the dollar.
Right. So it's an important factor in trade.
Yes and no. I mean, gold has always been a safe haven in times of turbulence and trouble, right? Because it's physical, it doesn't depreciate in seriously in value, and it's very, very liquid. I mean, if you've got an ounce of gold, no matter where you are in the world, somebody will buy it from you for roughly the market price.
Yeah, that's helpful, considering the inflation rate. Well, this is another graph, China US Treasuries holdings versus China official gold reserves. So that's an interesting cross.
It is, but what you have to understand, Clive, is China's official gold reserves and its actual gold reserves are probably much larger. I mean, you just have to look at China's the world's largest gold producer and has been for some time. Now, it produces just under 400 tons per year, right? And for the last 10 years, it hasn't been a net gold seller. So where's the gold going?
Yeah. Right. Where has it gone?
Yeah, I mean, my own opinion, and it's just an opinion, is China's gold reserves are probably closer to 8,000 tons than they are to the official 2,500 tons. And to a moot point, which will probably get loads of comments, is you have to remember that the US gold reserves is about 8,000 tons officially. but they haven't been audited since 1956.
Yeah. I do follow a bit of the gold channels, but they're always selling their own product, right? So it's very hard to. And they've said, oh, I've seen some mainstream guys say, no, they did audit it, but then I've heard, the libertarians say, no, they didn't audit it. It wasn't a proper audit. It wasn't a proper audit, in your opinion?
Yes, I don't think that. I mean, given that the number of countries over the past sort of 10, 15 years who've been repatriating their gold from
Mm.
being held in both London and in America has grown from Germany to France took it back in the 1960s under de Gaulle, right?
Yep.
Because they didn't trust. Now, did that come off of the gold reserve figure? We don't know because it's very
Yeah.
opaque. I mean, but what you have to understand, and this is a wonderful figure which I quote all the time, and I think your viewers will enjoy it. Since the beginning of time, only just over 210,000 tons of gold have ever been mined.
Oh, okay.
Now, if you look at the oil market where Russia produces 11 million tons per day, right? Right? That puts gold into perspective. That's going back to the ancient civilizations who first discovered gold then as a value and used it as currencies, etc. Only 210,000 tons of gold ever. And all of it exists because gold is indestructible.
Hmm. So where is it? Yeah. I mean, this is definitely one of those conspiracies where, where is the gold, right? I would say the
Well,
US,
yeah,
but
yeah. Well, in central banks, yes, whatever. But you have to remember. I mean, let's take a BRICS member like India. India is one of the biggest gold buyers. People, even poorish people, value gold and buy it. The wedding season is one of the biggest buying times for gold anywhere in the world, right? Uh, you
hmm,
go to India, you will see even poor people at weddings wearing gold because it's a measure of wealth. So they are huge buyers of it. So, the Chinese again are huge buyers of gold, jewelry, and accessories, etc. So, the vast majority of gold, I think it's about, according to my chums at metalsfocus.com, something like 60% of gold in circulation is in the form of jewelry.
oh, okay. So that's quite a large percentage, right? Actually, I'm going to ask you about a particular thing that's happening in China to do with gold. So, oh, look, the producers put up a video. So let's just have a bit of a look. No, that's okay. I think
That
he was
looked like
playing with
that
some.
looked like a commercial to me. Anyway, it doesn't matter.
It might have been. That's all right. No, because we're trying to, we're trying to be a little bit off the
Yeah,
mark here.
yeah.
So, but I'll continue. So, oh no, I wanted to show Rod's website. So SEO Bricks or SCOBRICSINSIGHT.com. There's a lot of fascinating, and this is where you're going to get a lot of what Rhod is going to bring of value to the audience. Please visit it and tell Rhod what you think. Grab the contact page and tell him what you think. Go on his YouTube channel, have a look at his videos, and tell him what you think. You'll get a lot of value from it. And if you enjoy him, please tell so. Tell us. We love Rhod. If we don't like Rhod, tell us. No, we don't want to see Rhod anymore. All right. So just, hey, both ways. It goes both ways.
Absolutely.
So okay. I'm gonna be actually, yeah. So I'm doing a highlight on Rod's stuff. So he's gonna tell us. Um, so this is an interesting article, only from the 9th of April, which is less than a week ago. The Chinese central bank has been continuously buying gold for almost a year and a half. And you've said here, March marked the 17th consecutive month that the People's Bank of China has been purchasing gold. And a little bit further down, you've said China's official gold reserves are now the largest since November 2015. So that's like 9 years ago. And its total foreign exchange reserves rose to 3.2457 trillion in March, the highest since December 2021. So 3 years. That's interesting. And I want to ask you about China, right? Because if the audience hasn't heard, and you can tell us more about this, because I want to get your feel. You know, when you say China has more gold than they're talking about, and China is not very transparent with its government statistics, obviously, but they recently instituted a program where citizens could buy gold through their bank account very easily. They're encouraging them to do it. And we know that the property market has issues there. Does that bring anything? Yeah.
Yeah, I mean, basically, it goes back to what I said about the Indians, etc. Gold is a store of value. Your property might go down, but gold is unlikely. I mean, since Gordon Brown of the UK sold the UK's gold reserves at, can you believe it, $192 per ounce. We are now at 2,400. So it's a store of value. I mean, the gold previously peaked in 2011 at 1,800, and then went all the way back down to around 1,1400. But as now, obviously, as lots of people are a bit worried about what the hell is going on in the world, they're starting to buy gold, and that includes central banks. And it's obviously because if you have gold and it's rising in price, it's better to hold gold than it is to hold US treasuries, simply because if gold's going up by 10% a year and inflation is 6% a year, you're making money. If you're buying US treasuries at 5% yield and inflation 6%, you're losing 1%.
Yeah, that's not a good investment for your long term to be losing 4 or 5%. That's not smart.
No, I mean, obviously, it's not just the Chinese that are investing in physical gold. In Russia, in April last year, they took off VAT from gold purchases, both for buying and also for selling. So Russian banks sold huge amounts of gold. Oh, I say huge amounts. I think it was about 90 tons in 2023, which doesn't sound a lot, but 90 tons of gold, when you work out that 1 ton of gold at current prices is $90 million, that's well over $2 billion.
Plenty. Yeah,
So,
I mean, this is...
all that glitters is certainly not gold, but gold is certainly glittering.
Yeah, I mean, I know the audience is curious about this. There's a very large audience about gold, you know, investment, hoarding, insurance.
It's not about hoarding, it's about having. When you look at situations that occur around the world, as I mentioned before, gold is a safe haven. It's liquid. If you need in times of emergency, you can always sell it for cash.
Yeah. I mean, that's reasonable. I think it's a reasonable investment for myself. I think that's very reasonable.
Well, absolutely. I mean, why do you think pawn shops do so well, right? Because if you've got a bit of gold and you need some money quickly, but you don't want to sell your valuables, you know, a nice piece of gold, you get some money. Okay, you pay a bit of interest on it, but you've got some immediate and liquid cash.
Yeah. Well, all right, let's go to the next one, because this one, you've said here, this article, so this is from the 7th of February. So last month, the US learned how Russia is circumventing the ban on dollars. This is a little bit relevant, right, with the BRICS and the sanctions, right? So, according to a study by financial intelligence company Sayari, it is possible that certain Russian banks may have found a way to bypass the ban on importing cash dollars and euros into Russia by exchanging gold for them in the United Arab Emirates and Turkey. Smart. According to Sayari data, various Russian banks exchanged gold for banknotes until at least July or August 2023. Senior analyst Zakari Zaroznya
Yeah.
confirmed that. Yeah, thanks. Confirmed that gold supplies were sent to the UAE, Turkey, and Hong Kong. So Sayari, based in Washington, sources its data on Russian trades from bills of lading, which typically include the names of the importer and exporter, as well as other shipment details. So that's good data. The data indicates that certain players who sent money to Russia also bought Russian gold during the same time periods. So that's good data, Rod.
Sure.
Yeah.
That's why I published it. But also,
Mm,
it goes back to what I said 2 minutes ago about gold being liquid.
mm,
If you want to pay for something in another country, ship them the gold.
right.
Because gold is convertible. And the other thing is you cannot trace the origin of gold. Unlike diamonds, like blood diamonds, etc. You can't trace the origin of an ounce of gold. I mean, all
Mm.
you have to do is re-smelt it, reband it, and its purity is intact, but you don't know where it's come from.
Yeah, you were saying that was in our last broadcast about gas. You can't ID gas.
LNG,
Yeah.
you don't know where it's come from once it's in the tank.
Mm. So that's definitely an advantage. So look, before we continue, the question is, and if you can address this, would be great because we're trying to offer good value for the audience. Want to come watch. So the question is, why are the BRICS countries all buying gold?
Uh, because I think they're all losing confidence in the US dollar, simply because they don't know who's going to be cut off next. I mean, you
Mm,
look at Russia is cut off from SWIFT, BRICS member. Iran is cut off from SWIFT. India's banks are being threatened with sanctions by the US for trading with Russian companies. So United Arab Emirates countries are also being threatened with secondary sanctions for trading with Russia. Russia's
mm,
Mir card, which is its local payment card that replaced the Visa and MasterCard, they've actually targeted countries like Kyrgyzstan, Armenia, Kazakhstan, their banks with the possibility of being cut from the system if they continue to accept payments through the Mir card system. So I think it's the fear factor of us. Let's do it now and make sure that we're not totally exposed to what's going on with the US, because the US basically uses the dollar as a cudgel and its fellow agencies like SWIFT, etc., as part of its cudgels to stop countries doing anything that they consider not in the best interest of the US.
right, right. So defensive. What about my thoughts? And I'm not an expert, but I'm putting it to you, Rod. The facilitation of trade, is that also a bona fide reason? BRICS
Yeah,
countries, because
yeah.
yeah,
I mean, basically, there was talk last year, and I did an article on SCO BRICS website about the fact that would BRICS offer a gold-backed currency? And my answer to that was no. There's no need for an alternative currency, and certainly not a gold-backed one. What they need is each country to have a reasonably strong currency that's
yeah,
not under attack by the dollar, is not dependent on the dollar exchange rate, and they can trade between each other in commodities. I mean, one of the things that's really going to happen, and I covered this with the grain exchange, I've covered it with the the Metals Exchange and the London Bullion Market Association cutting Russian gold companies out of their loop is the fact that what they need is to set their own benchmark prices outside of the dollar, so that you have a price for gold in rubles or in Indian rupees or Chinese yuan, and they trade to each other according to the benchmark of their own economic performance, so that not every currency exchange refers to the dollar. So if you're trading between Russia and China, it's on the value of the yuan against the ruble, not against the ruble to the dollar and then on to the yuan.
Right. Yeah, just the direct instead of doing
Correct.
this where they make money on
Yeah,
it.
and this is where the Western institutions like the Chicago Mercantile Exchange, like the London Bullion Market Association, like the London Metals Exchange, they set benchmark prices which are used worldwide, but they are not actively involved. I mean, in gold, for example, the paper trade in gold in London is about 300,000 times bigger than the actual physical trade in gold.
Yeah, that is just ridiculous. That is purely speculation. Yeah.
Not only that, there are 6 banks in London who fix the price of gold every day. Right? And all of them are either US, UK, and I think it's only one German, which is Deutsche Bank, are part of this small cartel. So they fix the price of gold. So if you move away from the dollar as being the pricing mechanism, then you will have a lot more what we would call price discovery, right? Is
Right.
India going to pay 10 rupees for 10 rubles worth of gold at whatever exchange rate they work out as a mechanism? So the dollar as the benchmark, I think, is going to die, simply because countries have had enough of it. It's debt servitude. If you have to sell your products in dollars and buy other products from other countries in dollars, all it's doing is enriching the banks. If you can set up a pricing mechanism that's based on local currencies against each other, then you're going to have a far more amicable trade, and the debt servitude of countries is going to end.
Yes, because they're not having to try and constantly get US dollars. That sounds to me like what Bretton Woods was doing, but we're going to use just gold to make currency stable in relation to each other.
Correct. So if a 1 ounce or 1 gram of gold is 6,127 rubles, and it's 27 or 28 rupees, etc., you know where it is, because the country has set its benchmark, and you can set your currency against it.
Right. So that is very interesting. I think people who are relatively in the know will see this as a positive thing, which is why we're bringing this up, right? It's not just because gold has gone up, because it has, and it's all very exciting, but there's more to this, which is why we're lucky to have Rhod to explain to us, right? So just to clarify that with our audience, right? We're talking about gold, but it's being used.
We're talking about currencies, we're talking about trade, and we're talking about the use of individual country currencies in trading with each other, which is the aim of BRICS. Not just BRICS countries, but those who want to work with BRICS. And basically what we're looking at is the beginning of the major de-dollarization.
Yeah, that's the word on the street, which is a little bit scary because we're not sure what's going to happen. But there's positive things, like I'm going to bring up here too, about not just gold, but commodities, right? The hard commodities. So I'll go to the next one. I think I'll go to the next one. All right. So this is, you were talking about here. So this is the 29th of Feb. So only a couple of weeks ago. or so. Russian gold miners changed sales channels and logistics due to sanctions. So sort of along this line, right? Um, YUJGK is one of the largest gold mining companies in Russia, ranking
Yeah.
fourth in terms of production volumes and second in terms of resources. That's pretty big. On February 23rd, the US imposed sanctions on the company. It stated that it will continue to produce and sell gold according to the approved plan. The company states it has no assets outside of Russia and does not interact with American legal entities or citizens. As of 2022, settlements in US dollars have been suspended. According to a statement, which is just before, please, go to the article and read it. When selling gold and purchasing foreign equipment, payments are made in rubles or in the currencies of friendly countries. I'm just highlighting here because obviously Rod has written this. He's going to tell you more. The go.
Yeah. Yeah. I
Yeah.
mean, basically, when I say they've changed sales channels, they've gone to the Dubai Gold Exchange or to Shanghai, where people are prepared to pay for gold in something other than dollars. So they'll pay in UAE dirhams, or they'll pay for it in Chinese yuan, etc. And if you're selling to the Chinese, they'll pay you in either rupees or in UAE dirhams, etc. So it has had no effect. And again, it's just the abject stupidity of those in the US and the UK. So they basically seem to think that they control the world, but they don't realize all they're doing is making themselves look ridiculous while they play this whack-a-mole game of let's try and stop Russia functioning. But you
Yeah.
can't. When you are a producer, the second largest producer of gold, which is a commodity that everybody wants,
Mm.
like oil or whatever, you're never going to cut them out of the market. And bear in mind, the G7 and the EU make up only 28% of the world's economy, right? So,
Right.
yeah, that means there's another 72% of the world's economy that are prepared to trade with Russia. And they will actually prefer to use currencies other than the dollar, as I pointed out there. The Indians want to trade in rupees, or the Chinese in yuan, the Russians in rubles. I mean, Chinese Russian trade is majority is done 96% of Chinese Russian trade is done in local currencies.
That's that's a much better way to go, from what I reckon. Why wouldn't you use your own currency instead of buying someone else's currency, US dollar, and propping up their currency and weakening your own? That's
That's the interesting point. And it took until sanctions for the head of the Russian central bank, Lena Nabiulina, to actually realize that something had to be done in dependence on the US dollar for international trade was just a ridiculous idea. And this is why I think in Kazan in October at the next BRICS summit, where we're going to see the plan for how BRICS countries and their associates and friends start to trade with each other through digital currencies using blockchain.
yeah. So that's some pretty exciting news to be coming up. So we don't, not just the BRICS games and the friendly games and the events going on there, but there's going to be this announcement that what they are planning to do with settlement.
Well, I
Um,
think they're actually not just they're planning it now, and they will make the announcement as it's ready to be implemented. What they're doing at the moment is how do they implement it, so that when they come to the conference, as it happens in Kazan, they can say, right, here's what we are now doing. Not here's what we plan to do 6 months, 9 months, or whatever. It's like we are ready to go. And I think that's the key to what's been happening. Why do you think Lavrov has been in China recently? Why do you think
yeah,
Putin's about to go to China in another month?
they're planning something.
They've all got it. I mean, things have been reasonably quiet with India because they've got their election coming up, but it looks like Modi's going to get another resounding thing. And as soon as that's over, I'm sure that either Modi will be off to Moscow or Putin will be into New Delhi, where they cement the whole bloc. I mean, given the fact that India and Russia are long-standing allies, as are China, and despite the fact that India and China have certain kind of problems with each other, like bickering stepchildren,
Yes, which doesn't really surprise me. I mean, considering they do, not to get onto that too much, but they do have this history when the British East India Company used to have the Opium War, so it's to grow the opium in India, transport it to China. So obviously that's my suspicion that was a lot to do with the angst that occurs now. There's a history there, and India is still part of the Commonwealth, so Anglo-Indian, right? So anyway, I'm injecting this here. I'm just sort of saying that that's my suspicion. But as far as I just want to bring this up because you were saying this to me previously, that Costco in the US sells $100 million of gold per month in 1 ounce bars to retail customers in their stores. That's happening now.
Correct.
That's crazy.
It's
a crazy
absolutely amazing. And it's not just, I mean, as I told you, Russian retail banks are doing much the same. In India, they tend to buy it in jewelry, but it's something that's happening all over. I mean, the US with Costco, but they've been buying up coins, be it Krugerrands or US Eagles, etc. People are buying gold because they know it's a safe haven. I know I keep repeating myself about the fact that when the excrement hits the air conditioning, gold is one of the few tangible assets that can't be set fire to. It's easy to store, etc.
It seems like a sensible way to save your money to me. But you know what? Let's look at Zimbabwe because I brought this up, and this is not about physical gold necessarily, but it is. So Zimbabwe, if people didn't hear, Zimbabwe's put up a gold-backed currency, and there's a little bit of news about this. So this is from Xinhua, I think that's how you say it. So just a couple of days ago, it says here, Zimbabwe's newly launched gold-backed currency, known as Zimbabwe Gold, the ZiG, has hit the ground running, gaining 1.1% against the US dollar in its first week of trading. Zimbabwe's sixth currency solution, because they've had this issue, if people are not aware, where they've had major inflation, major devaluation of their currency. So they've been doing that for the last few months. They've been combating that. And so this new ZiG, go ahead.
Zimbabwe had inflation that rivaled the Weimar in the 1920s Germany, right?
It's been that bad.
Currency. It was that bad. So this is a solution that suits everybody. It's a gold producer and diamond producer. So it was something that would stabilize the currency as it's a gold producer. So it's in a position where it can do it. Plus, its economy isn't huge.
Yeah. Well, this is good because we've heard over the last few years they've had a lot of trouble. So, this is good. They're not part of BRICS, but they're in Africa, and we've got.
But they're the next door neighbor to a BRICS member. They are the next door neighbor to South Africa. So they have a very close relationship with a BRICS member, and their economies are very much interlinked.
Yeah. So Ethiopia, South Africa, Egypt. That's the same continent. So, but yeah, despite initial market confusion surrounding the new currency, most banks, traders, and businesses successfully converted their old Zimbabwe dollar balances to ZiG. This sets the stage for ZiG to circulate alongside other foreign currencies under Zimbabwe's multi-currency regime, which will remain in place until 2030. So it's quite a long time. So electronic ZiG has commenced circulation, with ZIG notes and coins slated to enter circulation on April 30th. So that's not far off. Notes will be available in denominations of the usual, alongside half and quarter ZIG coins. So it says here, the ZIG will be backed by a basket of foreign exchange reserves and precious minerals, mainly gold. So the heading is a little bit, it's not just gold. Yeah. Around 80% of business transactions in the currently are already in US dollars. So they've had a lot of issues and they've bring in the US dollar. So yeah, I'm sort of highlighting those few things. So let's go a little bit back to Rhod's site. So we were talking about gold, but I thought, okay, let's look at some of the other hard commodities, right, that are relevant. So metals. Okay, it's not gold, but it's also important to look at. So this was just a couple of days ago. You've done this, Rhod. So US, UK sanctioned Russian aluminium, copper, and nickel on their exchanges. On Friday, the US and UK imposed new restrictions on the trading of Russian aluminium, copper, and nickel in an attempt to curb President Vladimir Putin's ability to fund his military operations, according to their statement. So new supplies of copper, nickel, and aluminium produced on or after April 13 cannot be delivered from Russia to the London Metal Exchange, where global benchmark prices are set, as well as the Chicago Metal Mercantile Exchange. Additionally, the US is banning Russian imports of all three metals. These are major metals, construction metals, manufacturing metals.
Yeah. Also, a large number of copper mines produce gold as a byproduct. But anyway,
yes,
if you read into the article, which I did, is basically the London Metals Exchange is where the hedge funds and the speculators tend to hang out. Most trade, I mean, Norilsk nickel, for example, are probably the vast majority of it trade goes direct through intermediaries to companies that use nickel in making stainless steel or the various other products that use nickel. Aluminium, again, the US buys no or very little aluminium. I think it's ridiculously low, in the low millions of dollars worth. It buys no copper, and as far as nickel, again, it's negligible. The UK, I think the UK spends less than £150,000 on Russian metal, officially.
Really?
Okay. Yeah. So, I mean, these
not much
measures by the deluded Haradan, Janet Yellen, she's the woman, by the way, if you remember, who told Americans 2 years ago that inflation was transitory.
Oh, yes, I remember.
Right. While food and energy prices have gone up by at least 30% since. And Grant Shapps is popular as somebody defecating in a spacesuit. You know?
On that note,
yeah. Well, the whole thing is again just going to speed up the BRICS setting up their own commodities exchanges based on what we discussed earlier. Of a benchmark is a ton of iron ore or a ton of nickel worth 50 rubles against 30 rupees or 21, etc. And you have the currencies linked to each other, a bit like back in the early 1990s when you had the European monetary system, where the currencies were valued against each other, a fixed sort of exchange rate that moved up and down, based on their currencies, not against the dollar, right? So you're going to have that, and when BRICS and their associate other producers, because you have to remember, the majority of producers of things like nickel, iron ore, etc., are in either the BRICS or the global side. So, I mean, Britain doesn't even produce any coal, right?
Yeah.
So, how can it give you a price for coal except it's on its London exchanges, right? So,
Yeah.
well, sooner BRICS do that, and it's going to happen. The Chicago Mercantile Exchange. I mean, the Chicago Mercantile Exchange trades in wheat, right? Now, that goes back to just after the war, Second World War, when the US and Canada were the world's biggest wheat producer. I mean, Russia,
Wow.
Kazakhstan, everybody else are now way ahead when it comes to production of wheat. Yet the price is still in US dollars. So if you're Ethiopia and you want to buy wheat, you buy it on a price based in on the US dollar, the Chicago Mercantile Exchange, set by
Right.
some hedge fund traders who are manipulating the price rather than talking direct to Russia and saying, okay, what's your best price?
Yeah. What do you want for your production? Yeah.
And
Yeah.
that's what is about to happen. This is where the whole shake-up in gold and other commodities is going to happen. And the BRICS are driving that forward.
Yeah. Well, actually, one of the viewers has said, which I think is relevant, not to exactly what we're talking about now, which I want to continue with, but are we on? Sorry if I mispronounce that. So now the US dollar versus gold era? That's short,
Yeah,
but
I,
mm,
no, I think it's not against the US dollar versus gold. It's the separation has occurred. Before, the gold and the dollar were pretty much tied to US interest rates and the dollar. Now, the dollar and gold are a bit like distant cousins. They're not really on speaking terms anymore.
yeah. It's
So,
interesting, that's yeah.
gold is finding its own niche financially and will continue to move away. And as I mentioned before, Russia prices gold every day by the central bank for a particular gram. I'm sure that India, China, etc., will start doing that and ignoring what the London Bullion Market Association cartel do in every day at 12 o'clock.
Yeah. It's got to change. Definitely. Let me
It's
continue.
changing.
Yeah.
It's obvious that it's changing, and they're getting nervous about it. Hence, the London Bullion Market Association, they stopped Russian gold companies being members, even the refiners, etc. And all they did was just go to Dubai or to Shanghai. It's like the only losers were the London Bullion Market Association and their credibility, right? And that will
Yeah.
happen with the London Metals Exchange. It will happen with the Chicago Mercantile Exchange when BRICS sets up its own institutions. It's taken a while, but the BRICS is now was the sleeping tiger, and now it's the leaping tiger.
Yeah. Leaping toe. I like that. That's a good one. I like that. The visual. Um, well, let me continue. It says here, I'm just bringing up some highlights, right? So the
Just say
sanctions.
hello to the BRICS tiger.
Oh, there we go. Nice. That is one of Russia's sort of symbols, uh, animal symbols, isn't it? The tiger or the leopard?
No, the Siberian tiger, there's very few of them. It's a Russian bear. Remember, every
The bear,
cartoon since the
of course.
19th century in newspapers is the Russian bear. In
Yeah.
the next video, I will show my selection of Russian bears.
Oh, okay. Oh, there you go. So you look forward to that. Okay, I'll just this highlight. So the sanctions will also impact traders' willingness to handle Russian metal. Many traders consider the ability to deliver on the LME as essential, and some contracts include clauses specifying that they will be void if the metal is no longer LME deliverable. So this is what Rod was just talking about, right? So, and then I'll just another highlight. Russia is a significant producer of three metals, accounting for approximately 6% of global nickel production, 5% of aluminium, and 4% of copper. That's a hell of a lot. So I've just highlighted this one. What will change is the speeding up of the countries of the BRICS and their allies, who have already announced the setting up of a grain exchange, plans to have a system for trading with each other in local currencies up and running in the near future. So it's only a matter of time before they set an independent platform for the trading of commodities. That's what we're talking about, right? Which brings us to the next one. So, Rod just wrote this up a couple of days ago. BRICS to launch grain exchange. And this is entirely relevant, right? So I'm sort of again from gold, but we're looking at hard commodities. The BRICS engaging in this, who actually produce the stuff, right, that we actually use. So the revitalized BRICS is strengthening its position on multiple fronts simultaneously. Russia intends to establish a shared grain exchange, which will enhance Moscow's significance as a primary supplier and bolster the food security of the interstate alliance. BRICS countries are the largest producers and consumers of grain, with Russia alone accounting for 20 to 25% of global trade. That's a lot. The old BRICS nations, so the originals, make up 40% of the world grain market, with a total production of 1.17 billion tons, and they consume 1.1 billion tons. That's very significant. We talked a bit about this, Rod, before. Again, not gold, but very relevant.
As I said just recently before, this is a precursor to moving away from the Western orientated trading systems like the Chicago Mercantile Exchange, like the London Bullion Markets Association, and more to the Shanghai, the Dubai, the Mumbai exchanges, and all linking in together, where the old institutions, which are mainly run for the benefit of speculators, hedge funds, etc., who are basically parasites on the back of the producers, are going to see their share of the cream that they're skimming off the top disappearing. So it's only going to happen very, very quickly because the mindset is there amongst Xi, Modi, Lula, and Putin, that they are basically changing the old world order, and the unipolar world is over, and we're now in a multilateral system, and that will take effect very, very quickly. And it's like empires; they take a long time to grow, but they end very suddenly. And the empire of chaos and lies, as in the US, is going to find its position with institutions like the IMF, with SWIFT, etc. Find their position greatly diminished, and the likelihood of them taking it lying down are minimal. And they'll do everything like they're doing with sanctions on Russia, sanctions on China, on chips, etc. But they're basically like King Canute from history, trying to hold back the tide.
Yeah, and I don't think they're going to hold it back because we're going to tell you about it. We're gonna ask Rod what he reckons, and he's going to write about it, and we're going to cheer it on. And I mean, I personally, we have not to go on too much, but in Australia, we have this issue here where the farmers, they produce milk, they produce certain products, and they're not even paid what it costs them to produce it. Parity pricing has just gone, right, with the neoliberal model. And it's no good because we need those products. And we want them to produce those products.
Five.
So
I've done a series of videos over the last couple of weeks about Russia's agricultural miracle. And
yes.
it's all based on the fairness and understanding that food security is crucial to a country's well-being. If it can't produce proper food and feed its people, you will have social unrest, etc. Now, every level, that's why Russia has a strategic plan and has had since 2014 for its agricultural sector, so that you can get decent quality food at affordable prices for the people, made in the country, grown in the country, and you're not. I mean, your average Australian probably doesn't realise that meat doesn't come from the supermarket in nice packaging, right? Milk
Unfortunately.
doesn't come in bottles, right? It comes from cows, right? But this is the whole thing where the whole Russia, as I said in one of my videos, is not only food secure, it's a major exporter around the world of everything from wheat and grains to meat, like chicken, poultry, not so much beef because that's still growing, but pork. It's now selling pork to countries like Vietnam and China. And the funny thing about China is
I love
the
that.
only thing they don't eat with wings is an airplane, and the only thing with four legs they don't eat is a table. So they sell them delicacies, which to you and I are not actually delicacies, but things like
No.
pig's ears, pig's tails, pig's feet, etc. And they are snapped up by the gourmets for restaurants in China and in Vietnam. So
Enjoy.
each to his own taste. I mean, I remember with some Chinese friends, and we would have this game in the Chinese restaurant, a real Chinese restaurant, where I was the only Quilo in the place. Quilo's the Chinese for ghost, and because I was white, I was the white ghost. And they would order something, and I would eat it, and then they would tell me what it was.
What? Really? That's a good game.
Yeah, so I ate all sorts of things of offal from animals, and I say offal with O-double-F, not A-W. So
Yeah,
pig's
awful.
intestines or chicken's feet or whatever. Right? And I can honestly say that none of them have ever made me feel sick. I've always enjoyed them and they were delicious. I mean, I think the funniest one was this thing that was very tasty. And I said, "What is it?" They said, "It's a sea slug."
Oh, sea slug. Oh, it was actually tasty. Really?
Very tasty. I mean, I
That's
wouldn't eat a
interesting.
land slug, but the sea
Yeah.
slug was absolutely delicious. So, these are the whole kind of things that the Chinese eat and Russia's exporting. So,
Good on him. Hey, enjoy it. That's well. Actually, so last off, we're going to sort of finish off bit, but I wanted to show Rod's. This is the Russia's gold industry report, and it's about Russia. And actually, I'll let you. I'll just show, and you go ahead and just tell us a bit, Rod, because I'm going to mess it up.
yeah. Well, basically, Russia is the second largest gold producer in the world, and it's gone from 20 years ago through to now, and in the next 2 or 3 years, it'll actually overtake China as the largest gold producer. And the interesting thing is the Russian gold sector is owned only by indigenous companies. So none of the voracious and parasitic mining companies, global mining companies, are actually involved in the sector. So this report went through everything, looking at the regions, looking at the companies themselves, and how things have changed and why they would continue to go forward. Unfortunately, I kind of launched it just when the embargo on Russian gold hit the London Bullion Market Association. So
Timing.
it hasn't had a lot of traction outside of Russia. But anybody who wants to know the secret and understand the Russian gold sector, then according to the experts and the benchmark in gold analysis, which is metalsfocus.com, this is the finest report they've ever seen on the Russian gold sector.
That's quite a commendation. I see here you've got a preview of your gold report, so you can buy
Yeah,
the gold report and you've got a preview. So I've just
yeah,
opened up the
people
preview.
can have a look at it. It's a 10-page summary of what's contained in the report. So you get a good idea that you're not buying, if you'll pardon the Chinese, a pig in a poke.
Oh no, I actually had a bit of a read through this, and it was really well done. Like it gave you exactly no fluff, you know what I mean, and all this. Just it was actually really good. I mean, this preview is very basic, and you probably get some of this information generally in public. But obviously, this is just a preview. But it's beautifully done. This is very professional. So yeah, I definitely encourage the audience to go there and have a look at it. Support Rhod, support the
Well,
team there.
whether they buy the report or not, it just enhances the credibility of this channel and my channel that shows that I know what I'm talking about when it comes to gold and commodities. Right? That I have the knowledge and experience to expound on the subject. And I'm not pulling the wool over anybody's eyes. I'm not promoting any other company or whatever. I'm just giving you quality information. And as I say, one of my old slogans used to be, in a world where only the well-informed survive, you need to be here and SEO Bricks Insight.
Oh, there you go. See, straight from the horse's mouth. All right. Well, we'll end it off there. So thanks, Rhod. Thanks for tuning in to BRICS Briefs. If you've enjoyed this dive into the multipolar world and wish to join the conversation, please comment below. Please like and share this episode to spread it as far as possible. You can follow us on our Substack and other social media platforms, all linked below. Stay curious, stay connected, stay optimistic, and let's keep exploring together. Ciao.
Goodbye.